So the earnings season for Q2 in the semiconductor space has not been off to a good start. We can see that ASML is down over 8% in the pre-market. We can also see that part of that is due to geopolitics, as ASML becomes essentially a collateral damage in the economic war between China, United States, and also Taiwan. So we can see that the comments from the ex-president Donald Trump, he said that Taiwan essentially, took about 100% of America's semiconductor business. But I think that comment is not helpful, and it's kind of, that's a kind of comment that someone with no knowledge about this semiconductor space would say. It's not like the Taiwanese just got this on a silver platter. They actually worked hard for it, and they foresee the demand for mobile applications, becoming bigger and bigger in the early 2010s. And by the mid 2010s, when Apple kind of become a good company to do business with, and they have a nice synergy with TSMC. Based on the mobile space application, TSMC has gone from, a good fab to the best undisputed king in the fab business. And also, part of that is that the reason that they went ahead of Intel, and Intel has been struggling ever since, is because Intel kind of did not care about the mobile space. But TSMC were business savvy enough to see that the mobile space would be, ever so increasing market year by year by year, and it's still gonna be that case. So yeah, I think this this comment is not helpful, and it's also hurting the the semiconductor space more than I think Donald Trump thinks. It's also a kind of collateral damage. Why? Because 49% of their sales in the just reported earnings is originating from China, and that's a big problem. If this economic financial war continues, then it could possibly be an even larger problem. Right now, there's some restrictions in terms of how many and what kind of sales they can have. We know that ASML is not allowed to sell EUV machines to China, but they also increased that to a bit of the other, sales, a bit of the, less leading edge machinery. So not only, the best ones like the EUV machines, but also the other ones. So it could potentially be a bigger issue, and it's gonna, potentially affect the stock because it's right now trading around a PE ratio of 50 if you look at it based on last year's sales, but also maybe 47 on the forward earnings. But me personally, still, despite this drop, although I wouldn't, necessarily say it's the best opportunity to buy stock despite it going down 8%. I think it's I think it's possible that as time goes on, the need of the EUV, which is the most state-of-the-art machine that ASML sells, will increase. You can see that Taiwan Semiconductor, the 3nm process and the 5nm are, the mostly EUV based. Some of the 7nm is EUV based and some not, but the rest don't need EUV. Because the EUV is needed as you go, finer and finer in the transistor size and the transistor density. So as you go, from 5 to 3 and then 2 and onwards, you definitely need EUV. And as the need for computing increases as we go onwards year by year, you should expect that more and more percentage of the sales from Taiwan Semiconductor, but also other fabs like Intel, like as well Samsung, will need to have EUV machines. So not only will the need of the EUV machines increase in terms of percentage of the volume manufactured, but we also know that there's a long trend over the past, like 4 or 5 decades, where the number of, essentially chips, be it, in your laptop, in your car, in your whatever it is, like air fryer, or essentially everything that needs a computer in it, the need for that kind of business gonna increase. And that's something that we can see as well over the past 10 decades. Like Taiwan Semiconductor's revenue has essentially, I would say, like doubled over the past 2 years or even more. So the revenue will increase because the need of the semiconductors in general will increase, but also a bigger and bigger portion for each year will need the EUV machines. So that's why I made this kind of list. We can see that in the Q1, here they sold 11 units of the EUV machines, the first generation. And in this quarter, they went down a bit to 8. But last year in 2023, they sold 42 machines for the entire year. My expectations is that ASML will sell, let's say, 70 machines in 2026, because this is based also on some of the comments that the company has gave, and they are increasing their manufacturing capacity, and I also expect that the percentage of the revenue that comes from let's say the EUV machines will increase as well. We can see that the rest of the machines, so the DUV machines, sold around 396 last year, so essentially 10 times more. But the interesting part is that, in terms of the revenue, look at this. So the EUV machine with like almost 90% less units shipped is essentially in the same ballpark as the rest of the revenue. So that's where they make the most money. They essentially make like 10 times more money per sold EUV machine than they do with the more older generation machines. This is also part of the reason because there's still some competition in that other business segment. So you can see that in the orange segment is the EUV for the Q2, but in all the other ones there's still some competition from like Canon and I think Nikon mostly. Also some Chinese-based companies as well. But on the orange part of the cake, so the EUV, there's no competition. They have been like the sole manufacturer of this kind of machines. And the good part for ASML is that, every single company that's gonna need the highest kind of performing chips will need these kind of machines. So ASML is speaking about increasing their number of EUV machine sales and manufacturing capacity. In my opinion, that's just, how things gonna go, at least in the coming 5-6 years. So my expectation is that they're gonna have around 17 to 18 billion of revenue coming only from the EUV in 2026, and that's like 2 times the amount of revenue that they had coming from EUV machines last year. And this is good because this is essentially the amount of revenue that they will have also in 2027, maybe even more, because you should expect by that time that most of TSMC's revenue should come from EUV based chips and the volume should increase. So I'm not worried at all. I think the stock price is a bit too high for my liking, but I think like if you even invest now today, maybe in 10 years, I still think this is a company that's gonna make good returns for the investor. But if I have to be honest, I think there's better opportunities in the semi space simply due to the valuation especially over the past year. I wouldn't complain in 2022 and 2023, but I think like this last leg from late 2023 to now kind of made the stock maybe like in fair value, and if it's at fair value, I'm not really like intrigued to invest money in it, because I think like I would find companies that are undervalued at the moment, and I think like possibly that AMD is one of them. So yeah, that's gonna do it for today. I think just be careful, but ASML's on the face value, the earnings was not that bad. They won't beat last year's number, and if they do, not by a whole lot in terms of revenue base. And we can see that their EUV kind of sales kind of decreased a bit compared to previous quarter, but that's just I think a one-off. I think by end of this year they still have almost 50% of EUV sales. So in terms of numbers, kind of looks good, and we can quickly look at the outlook. So they say that they're expect to have 6.7 to 7.3 billion euros, so around $8 billion in revenue in the next quarter. They also previously flagged for higher gross margin, especially for 2025. Their R&D cost kind of increased around 10% over the past couple of years, so not a huge thing. SG&A is quite in line. I like it that it's not a whole lot for a company of this size. So yeah, I think in general it doesn't look too bad, and sure, it's a bit of stagnation. If you look at it, net sales has been stuck around, let's say 6 billion, but yeah, it's gonna as I said, like they're gonna sell more EUV machines, so I expect the revenue to increase. And I think the geopolitics discussions may be a bit too overplayed. I don't think anything big will happen, to be honest, because if something bad happens, it's gonna not be good for the global economy anyways, and that's not in no one interest, not in China or United States or Taiwan. I think this is just Trump having a tough talk, but once his advisors speak about the importance of Taiwan, I think he'll kind of scale down the rhetoric there. So yeah, in general, I think sure, not nice to see the 8%, but it could be an opportunity. To be honest, I'm much more inclined to invest in the company now than I did yesterday. So there's that, but I still I would be a bit cautious. But Again, this is not investment advice. Thank you for watching, and please like and subscribe. Put your comments in the comment section, and yeah, see you in the next one.